So what are the time frames explained? A time frame is a set duration used to observe trends or plan tasks. In trading and project management, it helps recognize data and decisions longer. That's the use for time frames. So time frames reveal bigger trends, e.g., daily, weekly, while shorter time frames show detailed short-term movements, e.g., 5 minutes to 1 hour. Using multiple time frames allow traders to align the overall trend with precise entry and exit points. So most guys using let me say the line chart, they work with the weekly, monthly, yearly time frame, while for day traders like us, we use the 1 hour time frame, 4 hours time frame, 15-minute time frame, 5 minute time frame. And for scalpers, most scalpers use 5 minutes and 1 minute to trade. So they're all different, using depending on how you want to trade as a trader. So what are the key concepts? Definition: a defined period of monitoring an activity or trend, such as a project milestone or market price movement. Scale: from very short brackets, seconds or minutes for day trading, to very long months and years of investing. So for purpose, organize projects, meet deadlines, and identify patterns in markets. What are the common time frame category trading? So we have the time frame type, examples, and purpose. For long term, which is the primary, we have weekly, we have monthly, and we have yearly. Like I said, for long-term traders, which are also known as swing traders, so the purpose shows overall market direction and trend. So you can know the direction of, let me say, gold for the next 1 year. You know that gold is buying. For the next 2 years, you know gold is going to be selling. So that is what long-term is. Then for medium term, we have the intermediate, which is the daily time frame, and 4 hours time frame, highlight trends within the large picture. So we have the short term, which is 1 hour, 50 minutes, and 5 minutes for day traders. It reveals precise entry, exit points, and small price moves. So how they are used in trading: define the trend. Start with a higher time frame, HTF, like a daily or weekly chart, to identify the main trend, bullish or bearish. So I explained in the last videos, like I explained in the last video, the bullish trend is when the market is going up, and the bearish trend is when the market is going down. Find entry signals, move to a lower time frame, like 15 minutes or 1 hour chart, to pinpoint the exact trade entry, exit points that align with the higher time frame trend. So example, weekly chart HTF, which is higher time frame, shows an upward trend. So you go back to 4 hours chart, which is lower time frame, shows a small pullback and bullish signal. Use this as a precise entry for the long trend. So that would help you. So let's use this diagram. For example, we have the trader style, holding period, trend chart, entry chart, long term, 1 day, weekly, daily. We have the swing trade, few hours, days, daily. The trend chart to use the daily. For entry chart to use for hours. Short term, we have the 1 day, we hold it for about a day. We have the 4 hours time chart. We have the hourly chart for entry. So for scalper, which are few hours at most, hourly, which is use like the 1 hour time frame, and use the 15 minutes time frame to take precise position. So what is placing market and limits, or stop orders, also known as stop loss? Market limits and stop orders are tools traders use to control how and when trades are executed. Market orders focus on speed, executing immediately at the best available price. Limit orders focus on price, executing only at the specific price or better, though they may not fail. Do you understand? So for the stop orders slash stop loss, they trigger another order once a price level is reached to protect against big losses, though execution may occur at a less favorable price. Now we have the stop limit orders. Combine protection and price control by triggering a limit order instead of a market order when the stop price is hit. Now all of this I'm going to be explaining in the next video I'm going to be posting. I'm going to simplify every one of them like this, from market orders, limit orders, stop loss, stop limit orders. I'm going to explain everything.